Wall Street wants you to believe that the price of silver is forever locked down by paper contracts. They paint a picture of endless supply, controlled by institutional giants who can manipulate the market at will. But what if I told you that 50 years of hard data tells a completely different story? A story that proves their grip is weakening and we're on the verge of something big. We've spent countless hours analyzing 5 decades of COMEX inventory drawdowns, looking for the exact moment when the physical reality of silver scarcity completely overwhelms the illusion created by paper trading. This isn't about speculation or gut feelings. It's about cold, hard numbers. When industrial demand, which is growing every single day, finally and definitively outpaces what can be pulled from the ground, the price velocity can become truly unstoppable. And the data suggests we are closer to that moment than ever before. What really happens when the world's greatest manufacturing and technological breakthroughs collide head-on with a rapidly vanishing silver supply? Think about it. Silver isn't just a precious metal. It's a critical industrial component in everything from solar panels and electric vehicles to smartphones and medical devices. The demand is relentless and baked into our future. To understand what's coming, we have to look back. We are performing a data-driven autopsy on every single major silver price explosion since the 1970s. Why did they happen? What were the triggers? By doing this, we're uncovering what we call the hidden velocity gaps. These are the moments, the precise historical friction points, where the paper manipulation schemes failed spectacularly and physical reality took over, sending prices soaring. We can show you exactly what those moments look like and why they are so important for what's happening right now. The patterns are there if you know where to look. We're not just looking at charts, we're mapping the entire ecosystem of silver, from mining output and industrial consumption to inventory levels and the flow of paper derivatives. This comprehensive approach allows us to see what others miss. For instance, we have identified specific correlations between drawdowns in registered COMEX inventory and subsequent price action that are remarkably consistent over the decades. When the available physical silver in the vaults drops below a certain critical threshold, while industrial orders are piling up, the system begins to crack. The people who promise to deliver silver they don't have get squeezed. It's a classic supply and demand story, but on a global scale with decades of suppression building up pressure like a coiled spring. The historical data isn't just a history lesson, it's a roadmap. And that roadmap is now flashing a clear alert. Silver is approaching a structural breaking point that the mainstream market hasn't seen in decades. This isn't a prediction. It's an observation based on a convergence of factors that have historically preceded major moves. Our analysis of all this historical market data allows us to identify the specific triggers that lead to these high-velocity price movements. The key trigger has always been the bottoming out of global stockpiles. And right now, we are seeing signs that those stockpiles are under more pressure than ever before. We're talking about a situation where the readily available, above-ground supply is being consumed faster than it can be replaced. If you want to see the exact signature of a looming supply-side explosion, the evidence is no longer debatable. It's written in 50 years of market history. The story the data tells is undeniable. The historical precedent is clear. When physical demand truly overwhelms the paper charade, the market has to reprice. We've seen it happen before, and the conditions are aligning for it to happen again, but potentially on a much larger scale. The increasing demand from green energy and technology is a fundamental driver that simply didn't exist with the same force during previous bull markets. This isn't about hype, it's about understanding the mechanics of the market. The velocity gaps we've identified show how quickly the situation can change. It asks time to look past the day-to-day noise and see the bigger picture that the historical data is painting for us. The evidence is finally undeniable, and it's pointing to a very interesting future for silver. Thanks so much for watching. If you found this analysis valuable, make sure to subscribe and hit that notification bell so you don't miss our next deep dive.